The man who runs the world's largest hedge fund just dumped $461 million in Google and Meta, then loaded NVIDIA, Oracle, and Micron. Then told the world to put 15% of your portfolio in gold. Ray Dalio is repositioning for something, and his latest 13F filing just told us exactly what. Bridgewater Associates just filed their Q4 2025 13F. $27.4 billion in disclosed holdings across nearly 2,000 positions. And the moves are loud. Dalio slashed his Alphabet position by 40%, dumping over 1 million shares worth $333 million. He cut Meta by 46%, another $128 million gone. He also trimmed Microsoft, but here's what he bought. NVIDIA up 54%, adding $253 million. He now holds over 3.8 million shares. He loaded Oracle. He loaded Micron. He loaded Broadcom and Adobe. This isn't a tech exit. This is a rotation within tech. Dalio is moving from the companies spending on AI to the companies supplying the infrastructure for AI. He's going picks and shovels, and he's doing it with size. But the stock moves are only half the story. Dalio's macro positioning tells you even more. His family office just disclosed $503 million in US stocks for the first time since the pandemic. That's a signal. He's re-engaging with American equities after years of caution. At the same time, he's publicly saying the US has an unsustainable debt problem. He's warned about geopolitical conflict. He said dollar-denominated assets are getting riskier. And he's telling everyone put 10 to 15% of your portfolio in gold. Gold just hit 5,400. Dalio called it years ago. He also recommends inflation-indexed bonds as the safest investment you can make right now, locking in about 2% real return above inflation. And his all-weather framework is shifting. Less bonds, more gold, more commodities. Even Dalio himself is moving away from the original all-weather model he made famous. So what's Dalio actually telling us with these moves? 3 things. 1, AI infrastructure is the trade. Not the companies using AI, not the chatbot wrappers, the companies building the chips, the data centers, and the cloud capacity. NVIDIA, Broadcom, Oracle, Micron, that's where the money is flowing. Too big tech is overexposed. Google and Meta spent over $100 billion each on AI capex last year. The market is questioning whether the returns justify the spending. Dalio clearly agrees. He's cutting the spenders and buying the suppliers. 3 hard assets are back. Gold at 10 to 15% of your portfolio is not a hedge anymore. At 5,400 an ounce during a war, it's a core position. Dalio sees a world of rising debt, rising conflict, and declining trust in fiat currencies. Gold is his answer. So what's the chaos capital take? When the man who built a $150 billion hedge fund on macro research starts making concentrated moves, you pay attention. You don't have to copy him, but you'd be foolish to ignore the signal. The signal is clear. Rotate from AI application to AI infrastructure. Trim the mega cap spenders, load the suppliers, and build a gold position if you don't already have one. Dalio doesn't panic. He positions. And right now, with a war in the Middle East, inflation running hot, and AI capex spiraling, his positioning makes a lot of sense. Billionaires file their 13Fs 45 days late, which means the moves Dalio made in Q4 are already working. The question is whether you're going to wait for Q1 or position now. The capital markets are chaos. Embrace it, and I'll see you in the next video.